get some insights in the news shaping the markets. The man with the money tie, Andrew Brenner's here, head of international fixed income securities at Nat Alliance Securities. Thank you for being here. So are we in a wait and see for the PCE? Is that what's happening here?
The market is very much coiled for a big move, and we're going to see that tomorrow. We're going to see it in two ways. First, the PCE number, where the whisper number is a little bit higher. We're thinking about 2.93, which I think will cause a lot of consternation in the bond market. But as the middle of the day comes, you're going to have a huge duration extension for the month of February, as well as a large reallocation. Stocks have been on fire all month, and the bond market's done nothing but go down. So we're going to see a big reallocation. So whatever the PCE number takes away, the end of the day should bring back. But the market is very much coiled, and we're going to have a big move tomorrow.
How concerned are you about inflation and what the Fed may or may not do? What moves they could make that would be a big mistake, for example?
I think inflation is trending in the right direction. I think we have a little bit of a few blips in January, which according to Morgan Stanley is not abnormal. That in February, the January numbers usually seem to overstate what's going on. I think the Fed needs to look at another month or two of inflation data. I think it's going to be much better. I see the economy losing steam. I saw the consumer confidence numbers yesterday, looked awful.
Yeah.
And I look at other things that are just showing a slowing down. Yes, you have a lot of speculation in the market. I mean, Bitcoin, you and I were just talking, it's over 61,000 this morning. That's ridiculous. But you know what?
Why is it ridiculous? There are people who think it should be at 100,000.
Yeah, well, in the late Scott Miner once said 400,000. But you know, what exactly is it? Is it a currency? Whatever. You know, I don't want to get into Bitcoin right now because that's not my expertise, but
Right.
I don't particularly like it. And you have the stock market still near the highs. So I think that the bond market, the key thing is the 5s and 10s holding 430. Right now, as I look, they're probably within a basis point or two lower than 430. If it breaks, we're going to go up another 10 to 15 basis points. If it holds, then I think we're going to go down 20 basis points. As far as the Fed's all the Fed governors have been reading from the same script. They were able to push the total amount of cuts for 2024 down from 7 all the way to 3.2, something like that. So they've been successful. So they've won that battle, but they're going to lose the war because they're going to end up cutting double the amount that they expect this year. Things are slowing down. They need to get on top of things. I mean, you saw a Canadian pension fund yesterday sell a building for $1. I mean, that's how bad things are. You know, so I think that there's a lot of problems in the economy. I think things are ready to break, as well as I think the counter is there's been too much fiscal stimulus. But you know, we'll see if the government closes down on Friday and the following Friday. But right now, that's not my concern.
When you've been on, you've talked about a lot of cuts, that we were going to need a lot of cuts. I think you were saying like 5.
I think I said
something
6.
Like that, 5 or 6.
6.
I can go back in the notes. I know you were on the upper end of it.
Yeah.
To your point, and consumer confidence makes that point, right? The first decline that we've seen since November. Durable goods not strong. GDP not strong. We're not seeing some big boom on the, and you have 7% mortgage rates, which is still, you know, putting
killing
pressure.
the housing market.
Yeah. So
Killing
while
it.
new home sales and apps for new houses seem a little better, existing not doing well at all.
Even the guard at the front gate just said, "What are you going to talk about today?" It's going to talk about interest rates. He said, "You got to get those mortgage rates down.
Yeah.
You know,
yeah.
things on Long Island are too high, and the mortgage rates are too high."
I'm from Long Island. Let me tell you this. I mean, when we think back, our parents, my parents, had 17% times when there was mortgages, right? I mean, those rates were very high. So still, I guess, somewhat historically low, but not near those lows that we had. That being said, let's spin it forward for the end of 2024. How do you think the markets will fare? We have an election year. How are we doing with credit? For example, you said credit remains on fire. I'd like to hear a little bit about the longer term look.
Well, the longer term look is I think you're going to struggle at some point in the next 2 months with equities. But you know, the AI boom is real. The question is, how real is it, and how much more run room do we have? I mean, looking at a lot of different viewpoints, it seems to be more people think that AI is going to lead us to even higher levels. But I always wonder when you move too far too fast. As far as rates go, I think the Fed's going to end up cutting 6 times. I think we're going to be at 3.5% to 4% Fed funds, not the 5.25% to 5.5% that we're at. But it doesn't mean we can't go up to 4.50 10 years first. But now you're asking me to look out 10 months. So I think we're going to be at lower interest rates. I think we're going to be at higher equity prices.
Yeah.
I do think that things will be better. As far as the election goes, obviously I have my opinions on one versus the other, but the reality is that I don't think it's going to change what the stock market's going to do dramatically. I think it's all about the Fed. And if you look at the Fed historically, whatever they predict is usually wrong. So, take either the under or the over. In this case, I'm going to take the over for the number of cuts.
Yeah, understood. And just the global picture, for example, we've seen growth in Japan and India. China, there's still talk about that reeling real estate market where they're trying to come back from some of those woes. Just the global picture and why it's important to us.
The global picture of the economy, wherever you look, is absolutely awful. Japan is in a recession, even though their stock market's at a high.
Right.
China is reeling, no question about it. Country Garden was the last one to be put on potential liquidation. Things in China are horrible, and that's leading to problems in Germany. The German government cut their expectation for 2024 GDP from 1.3, which is awful to begin with, to 0.2. So they're not looking at any kind of growth. And as you look at things, I think things are awful everywhere but the United States.
Well, hopefully that doesn't trickle over here.
It will not.
Okay. Andrew Brenner, Nat Alliance Securities. Always great to see you, particularly on when we're getting a lot of data like we are. Thank you. And those whisper numbers that he mentioned too for the PCE.